Hello, beautiful people. Today we're going to go ahead and look at UJ on the charts, and I want to show you how to trade the violation of the head and shoulder pattern, right shoulder. So let's go ahead and get started. So the first thing I do when I open my charts is I hit the daily time frame because I take my entries on the 1 hour. So daily 4 hour, 1 hour are my top down analysis. As you can see, UJ had been trending up and then now it's trending down most recently. And I'm looking like, okay, we're here. So I always look left to see why did we stop here. As you can see right here, this is a valid demand zone because this is the last selling candle right here before this market had took off, broke this structure and pushed all the way up. So that is why I'm looking to take a buy in this area. So what I'm going to do is I can mark this entire zone blue or just use the wick to body of the most recent daily close and create my zone. So it's up to you however you prefer to do it. I don't like too big of a zones, but this is how I'm going to do it today. So I dropped to the 4 hour time frame just to see if it lines up with what I'm looking to do. When you have the daily, the 4 hour, and the 1 hour all line up for an opportunity to buy or sell, that means that you have a stronger opportunity to win the trade. So just make sure you remember that. Now that I'm on my 1 hour time frame, I'm going to go ahead and look for a setup. And as we all know, the head and shoulder pattern is drawn like this. Market goes up, it comes down, it pushes higher, breaking structure and creates a higher high, and then it pulls back, giving me 100% retracement to the left shoulder. And then what I'll do is push back into the left shoulder, and then here is where you would take the opportunity to take the sell back to previous support. Now another version of the head and shoulder pattern is when the market comes up and it pulls back down, it pushed past the left shoulder, creating a new high, and then it breaks the previous support level here and then comes back up to give you the right shoulder for a sell opportunity as well. So we're going to look at both of these variations of the head and shoulder pattern, and then I'm going to show you what the violation looks like. So as you know, when you are drawing up your zone, say you're looking to sell on the right shoulder and there was a wick, just remember you would draw your zone from wick to body. So what that looks like is, let me see if I can get the right tool out. So say this was a wick of this size, okay? Make sure you draw your parallel channel, use your parallel channel or box, whatever you do to draw your zones. You're going to go ahead and take the top of the wick, and then you're going to go ahead and hold shift down and then drag it till it touches the close of that or the close of that candle till it touches the flat top. And that's how you draw your zones, okay? Now, say we've already sold this trade down, okay? What we're going to be looking for at this point is for the market to violate the head of the head and shoulder pattern. So what I mean by that is you're looking for the market to pass the right shoulder, pass the head, okay? Because at that point you got like a change in direction. And so what you're going to wait for is the market to pull back down into the same zone that you drew up for your left shoulder. And then what you're going to do is take your buy up. Now your buy, your TP can be at the previous high, or if you happen to see another head and shoulder pattern, once it breaks that previous high, you can have a TP 2 at that level as well, or the next resistance area. And it's vice versa for a sell. We're going to focus on the buy today and do the sell another time. Same thing with this pattern right here. Once the market violates the right shoulder and the head, okay, so it blew past both. What you're going to do is wait till it comes back down at the same zone you drew your left shoulder, and then you're going to take the buy up. You can take it to the previous high or the next level of head and shoulder. or resistance area. So in this particular illustration, okay, what I had saw that there is a head and shoulder pattern, just a regular one here. So what I'm going to do is draw a channel because I noticed the market hasn't broken below this zone and it hasn't broken past this zone. So this is called pretty much trapping the market. You could use trend lines to do the same. I just noticed that it was not breaking past the zone. It was creating higher highs, which is a good thing. That's more motivation to want to buy up. And so what I did was I went ahead and drew out my head and shoulder pattern. It already gave me the 100% retracement right here. And so as you all know, once it gets to the right shoulder right here, we're looking to take the sell. Now, if it give it to you, cool. If not, okay, well, better luck next time. So I'm not taking the sell because I'm more interested in the buy because of my top-down analysis. I know I'm in a demand zone, so I'm not going to take the sell. Plus, the fair value gap is not just huge enough. It's not enough for me unless you're a scalper. I mean, you can easily, if you're taking the sell down, I mean, this is a big zone. You can easily get 50 pips and still be good. And so what I'm going to patiently do is wait for this market to break past this channel. So what I'll do is set my alarm for exiting the channel, and then once the bar closed, and I will set a detailed message so I'll know what I need to do. So look for head and shoulder violation to buy. Simple, straight to the point. This will go, this note will go directly to my cell phone. That way I know to open my charts. Now, I'm not only looking for the right shoulder violation, I'm also looking for the market to break this area. As you can see, I have equal highs here. So I would like for it to break past this previous resistance area to give me a more warm and fuzzies to buy this market up. Now, where would I take my TP in this particular case? So say it breaks past here and it stops here. My first TP can be here. It's up to you of how much money you want to make. So it could be here. And so once this market, say gives you the right shoulder, right? And then it violates. So I'm going to go ahead and push past it. And I'm going to come back to the right shoulder for the buy up. Okay, TP here, TP1 will be there. And so to look for TP2, what I would do is look left and see where my next area of resistance is here. And you can also use your fibs, okay? So get rid of this real quick. You can also use your fibs to help with your TP levels as well. What you would do, since you're buying, you would take your fibs from the swing high to the swing low, and you will look for areas that will more likely have a retracement or some type of resistance back down. So this is this move. This was the last swing high that pushed the market all the way down. So let me go ahead and drag it all the way down. Perfect. And so I'm going to look at the 50% level. The market normally gives back 50% before it retraces and gets so. And if you look left, you'll see that this 50% lines up with. So this will be a perfect area to take profit at right here. Okay. And once the market breaks past this zone, then you can look. So you got to break out of this zone to take profit at your next level right here of resistance, and then as take profit 2. And notice there's a head and shoulder pattern. There's fresh money in this zone. There's a possibility that the market could break past this one and just go straight here, but This is a pretty good risk to reward trade if we can just get some momentum going. So the market moving levels, remember that. So just take your time, and once the market breaks these areas of resistance, then once you know, using your confirmations, you will go ahead and take that trade up. So all right, everybody, this concludes my training section on how to trade the head and shoulder violation of the right shoulder. And I wish you guys the best of luck on your trading journey. Stay tuned to the next one. Take care.